are some of those, the progressions? Like, what are some of the alternative funding or sources of loans that you provide while they're developing their credit or their ability to then get to more traditional long-term, lower-cost bank loans?
Yes. So there's a variation of business loans are out there. We talked about lines of credit. We talked about working capital loans, but also we're talking about factoring. Somebody who has a contract, let's just say it's a contractor looking to grow his business, and he's working with several vendors. So a factoring, it's another way where they can get funding as they're working on a project. And which factoring is basically using AR, your accounts receivables, that you're going to get payment within 30 days or kind of 60 days. Of course, there's private lenders that if you own a property that has enough equity, you can do a refinance, cash out to get funding for your business. You have individuals who basically are operating, and they may own one or two rental properties, right? These properties may be free and clear, or may have a small balance. You can also acquire financing through a private lender to do a kind of refinance, cash out for your business. That's another kind of segue. And then we talked about how some folks kind of create in credit history that they start with a small business credit card, right? And a small business line of credit, maybe at 5,000, something small, and they kind of grow from there. I've seen folks who have worked pretty close with a credit repair company who has helped them through the years, and now they can borrow not just 5,000, but 50,000 or beyond. I've seen that time and time again. But these folks really had to be engaged. They had to be on board to working on that credit. Credit is very important because credit is an indication on what you're going to do next. So to give you an idea, a bank will look at a 680 credit score. If you don't have that score, you can't get financing. With us here with the credit union, our lowest scores is a 540, and that's kind of rare to say. But we kind of take that risk. We kind of work with that individual, and then gradually we kind of graduate them to the next level of funding. And if we can, we have resources that we can tap into. A small business lender that kind of works with the underserved, and we kind of guide them there, give them that referral, and they can start working with that individual to kind of accelerate them to a next level, to a bank. You get a good credit score that is good enough to get a bank loan, then we did our job. So that's the key to us, to get them to the next level. Mm-hmm. If not, just kind of be available into whatever they need. Folks need equipment loans. Folks need vehicle business loans. That's available as well. Usually those happen with 20% down, and that's kind of across the board. When somebody's looking to buy a property, it starts with 20%, and depending on credit, that can be a little bit higher. So, and one thing that's very important is financials. Financials is the key. You have to have the capacity to take on that debt. I see financials all the time that are not showing a profit, right? So you want to create that trend that you are eventually going to show that profit, because that's the only way a lender is going to be able to provide that funding. So that capacity is very important, and showing that profit is kind of key. We know folks kind of just want to break even and show a loss, not to pay taxes, But when you're trying to borrow, you have to show that income. You have to show that profit that you can take on that debt.
Mhm.
And that's very important.